$50. I mean, it's obviously an important number. 1980, 2011, here we are again. And the only question in my mind is whether the failure to deliver creates above $50 silver, or does above $50 silver create the failure to deliver. And the derivatives market now is over 2 quadrillion. The problem with derivatives, with the type of volatility in the markets that we've seen already, and that we're obviously going to see bigger volatility going in the future, the problem with derivatives and volatility is it creates very big winners and very big losers. Now, you win and you start jumping up and down until you find out that your counterparty can't pay you.
Yeah.
Which means they've bankrupted and now they're not paying you. And because they didn't pay you, other counterparties won't do business with you because they're fearing that you're going to go out of business. And that's how the derivatives daisy chain collapses.
In today's news recap, UBS raises gold, silver price forecasts again. UBS has raised its gold and silver price forecasts again, flagging strong momentum from investor demand, macroeconomic uncertainty, and persistent fiscal and geopolitical pressures. The bank now expects gold to reach $4,200 an ounce across all time frames, up from its prior view of $3,800 by end 2025 and $3,900 by mid-2026. Silver forecasts were lifted to $52 and $55 an ounce, compared with previous targets of $44 and $47. UBS strategists said the revisions reflect expectations of stronger central bank and exchange-traded fund demand, alongside ongoing support from declining real rates and fiscal imbalances. The strategists also pointed to silver's greater room to overshoot, given its higher volatility, adding that their forecasts remain skewed to the upside. The team said macro, political, and fiscal dynamics should continue to support demand for safe haven assets, allowing the current fear of missing out mood to persist. UBS also expects the gold-silver ratio to move towards 76 times, reflecting stronger silver investment demand relative to gold. Underlying drivers include the Federal Reserve's return to rate cuts, a weaker U.S. dollar, and fiscal deficits in major economies such as the U.S. and France. UBS sees these factors as unlikely to be resolved soon, keeping the backdrop favorable for real assets. Central banks are expected to buy 900 to 950 metric tons of gold this year, just shy of last year's record, with private investors also increasing allocations as a hedge against U.S. Treasuries exposure. While gold and silver lead, UBS remains more cautious on platinum and palladium, which are still tied closely to industrial demand. The bank raised its platinum forecast to $1,350 an ounce, up from $1,200, but said the metal still implies lower prices ahead. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button, hype the video, and check goldsilverstacks.com to get the Stacker's Handbook, the ultimate guide to trade the gold-silver ratio and stack efficiently without relying on market commentators. Link in the pinned comment. Let's get back into the episode.
I think the story in silver is that the sharks are finally smelling blood in the water. And when I say blood in the water, I've been one who's talked about failure to deliver for a long, long time. And it really looks like what has really changed over the last 6 months to a year in the silver market, and also gold, but primarily in silver, is that if you look at COMEX, you look at the first notice day, first delivery day, the amount that are standing. In the past, it used to be, and let's just use a number of 100. 100 contracts would be standing, and by the end of the month, maybe 15 or 20 were still standing. Now, you start the month with 100, and you may end the month with 200, 250 or more. In other words, there are buyers that are buying in the delivery month with the specific idea of taking delivery. And that is draining It has been draining inventory. I mean, you can just see the deliveries have been on a massive scale. And I think, enough people are seeing that to understand that the potential of a failure to deliver is very real, very clear, and right in front of us. If Russia or China or any nation stepped in and created a failure to deliver with a series of big trades, that would be a declaration of war.
Aggressive, yes.
Right. And they don't want a declaration of war. Francis, I mean, there's people out there way smarter than you and me that are Chinese, that are Russian, that are Indian, these people know where this game goes. They understand that and central banks across the world, as evidenced by offloading treasuries and unloading gold, they know that when all is said and done, there's going to be a black hole in their balance sheet that was once filled with King Dollar. King Dollar, they understand they got to get out of the way. And let me also say they do understand fully that the dollar is the Achilles heel of the United States and of the entire Western financial system.
Yeah. I was talking to Eric Young, and he was highlighting the development. I'd seen it, but we addressed this very specifically with him. The calm and organized bolting network that is being established for gold outside of China. So, they're looking at a central place in the Middle East. They're looking at Switzerland. They're looking at Singapore. They're looking at India. They're looking at a bunch of places. And this is saying we're going to do gold-backed trade, and we'll keep an inventory. And these will be regularly audited and far more transparent. And we'll actually cross the itemization of who owns what with each trade. So you're talking about, you got the record deficits with the US to Europe and China. This is a totally open development of a parallel system, which is gold-backed. Tell us your take on how you see that one working out.
Yeah, I mean, this is simple. I think people, like I said, have and are figuring out that the dollar, the days of King Dollar are behind us, and there is going to be a massive revaluation of gold. Let me put it simply, gold is coming into the system, not out of the system. And for years and years and years, central banks did their absolute best to try to demonetize gold. It didn't work. The beginning of the cycle was August 15th, 1971, when the U.S. went off the gold standard. Gold, as you mentioned, bottomed in 2000, 2001. From that point forward, from that point forward, gold has gone higher. But back in the 2000s and the 2000 teens, you would see spectacular smashes of gold and silver that were done with paper, done with naked futures contracts. That has not been happening. I mean, you can go back to, I believe it was October of 2022. If you look at a chart of gold, it became a tractor in first gear. And the reason being that was the month, and you can look on a chart, and it began one day exactly after the Russian reserves were.
In today's news recap, UBS raises gold, silver price forecasts again. UBS has raised its gold and silver price forecasts again, flagging strong momentum from investor demand, macroeconomic uncertainty, and persistent fiscal and geopolitical pressures. The bank now expects gold to reach $4,200 an ounce across all time frames, up from its prior view of $3,800 by end 2025 and $3,900 by mid-2026. Silver forecasts were lifted to $52 and $55 an ounce, compared with previous targets of $44 and $47. UBS strategists said the revisions reflect expectations of stronger central bank and exchange-traded fund demand, alongside ongoing support from declining real rates and fiscal imbalances. The strategists also pointed to silver's greater room to overshoot, given its higher volatility, adding that their forecasts remain skewed to the upside. The team said macro, political, and fiscal dynamics should continue to support demand for safe haven assets, allowing the current fear of missing out mood to persist. UBS also expects the gold-silver ratio to move towards 76 times, reflecting stronger silver investment demand relative to gold. Underlying drivers include the Federal Reserve's return to rate cuts, a weaker U.S. dollar, and fiscal deficits in major economies such as the U.S. and France. UBS sees these factors as unlikely to be resolved soon, keeping the backdrop favorable for real assets. Central banks are expected to buy 900 to 950 metric tons of gold this year, just shy of last year's record, with private investors also increasing allocations as a hedge against U.S. Treasuries exposure. While gold and silver lead, UBS remains more cautious on platinum and palladium, which are still tied closely to industrial demand. The bank raised its platinum forecast to $1,350 an ounce, up from $1,200, but said the metal still implies lower prices ahead. Now we'll show you the best clips of the latest interview, but first smash the subscribe button, hype the video, and check goldsilverstacks.com to get the Stacker's Handbook, the ultimate guide to trade the gold-silver ratio and stack efficiently without relying on market commentators. Link in the pinned comment. Let's get back into the episode.
The Fed had $65 billion in actual equity, holding up the entire pyramid upside down. Now, since then, because interest rates rose, they lost several $100 billion, which means the Federal Reserve is technically insolvent.
Yeah.
I mean, that's an example. That's a perfect example right there. When this happens, once you get a lockup in credit, everything stops. Nothing runs. And when I say everything, forget about the markets. Forget about stocks, bonds, Bitcoin, everything. Forget about all that. The real economy stops because the real economy no longer runs without credit. Every instance, everything that's done in the real economy has a use of credit. And I've used the example of a loaf of bread. You take it from seed to the grocery store shelf, and then you could even go beyond that because people are buying food on credit now. But there's at least 10 uses of credit to create that one loaf of bread. And if any of those credit uses gets disrupted or it ceases, there's no loaf of bread.
Yeah.
Let me make one more comment. In the 1930s, we had the Depression. That was created, if you will, or kicked off from the financial markets. But society was different back then. We still had an agrarian society. And let me just say that people were better back then. Neighbors knew neighbors. Neighbors helped neighbors. And in today's world, when things go bad, neighbors scavenge on neighbors. People are now, they don't have the moral compass that they had back then. You have people with a poor moral compass. I think it was maybe 2017. I first came out with, my belief is when this goes down for a spell, whether it be 2 days, 2 weeks, 2 months, God forbid 6 months, in my opinion, you're going to be looking at Mad Max. Because when you have all the services are going to cease. Your ambulance services, your fire services, your police services. And I've actually I've asked probably a dozen different police officers, when things go bad, are you going to go to work or are you going to stay with your family? And the answer that I get depends on what type of police officer I'm talking to. If I'm talking to a state trooper, they're going to be with their family. If I'm talking to the local Barney Fife, I'm going to work. I'm going to do my job. Well, the central bank digital currency is what they want to bring forward. The way they put the central bank digital currency forth is they tank the markets and begin invoking the great taking. When people have nothing, they're going to beg governments, we need a universal basic income. We need a central bank digital currency. Please save us. That's how they bring it forth, is they allow the markets to collapse. They take the assets, which now is perfectly legal because those are the laws that are in place, and then they revalue gold. I think that's the chronology of how it works. As far as silver is concerned, India has doubled their imports. And what has happened over the last, I think it was 9 months ago, or maybe not even 9 months ago, where Russia announced that they'd be buying silver and considered it a strategic reserve. And then that motion was seconded by the Trump administration in July or August, designating silver as a strategic reserve. So, India could probably just read the headlines and say, well, hey, wait a minute, we got Russia saying they're going to buy silver, we got the United States saying they're going to buy silver, maybe we should buy silver.
Yeah.
Now going back to your cup and handle chart, it is without a doubt my opinion that over $50 we get a failure to deliver, because there will be complete blood in the water. And I guess the saying, there's no bull market like a gold bull market, and the reason being, it's not all greed. You have a lot of buyers that have fear. They're buying gold, they're buying silver, fearing that their fiat currency is going to collapse. They're going to be left with nothing. So I will just say this, that fear is a greater emotion than greed.
What do you think of his take? Do you agree with him? Is a big rally coming for gold and silver before a big top forms, or will gold and silver outperform all expectations? Let us know your honest opinion in the comment section down below. Smash the hype button if you enjoy our recaps, and check this video right here because you'll love it. I'll see you on the other side.